Hello everyone, this is Mark Leibovit of the Leibovit VR newsletters. This is a Leibovit VR tutorial for Monday, April 6th, looking at my VR indicator here on Tradestation. We're going to be looking at the S&P spiders in just a moment. Here on Leibovit VR newsletters, we do offer several subscriptions. The Silver, which provides you with our daily market commentary, our Platinum, which provides you with that plus specific recommendations, our Gold Letter, which covers major commodity markets, in particular the precious metals, crude oil, etc. The Forecaster, which is our annual report, a cyclical report of the major markets we've been publishing since 1987. Our Vice Letter, which is our new letter, which covers everything from cannabis to cigarettes and alcohol. Very interesting product, and it is providing trading recommendations as well. And of course, if you haven't purchased the Trader's Book of Volume, you should do so. You can do it through Amazon and other trading stores, trading business stores. It's the definitive work on volume. Here on Tradestation, here it is, the trading app store, $95. We have a free trial, however, so I encourage you to sign up. We look at 3 versions of the volume reversals. You get all 3. First is our sequential, which is what I emphasize on these recordings, which posts all positive and negative volume reversals. We have our directional version, which filters out repetitive VRs. That's also included. And we have our 2-day version, which is based on the premise that when you generate a volume reversal, you tend to get a movement in the direction of the volume reversal for a couple of trading days. So again, I encourage you to sign up if you haven't done so already. Looking at the SPY chart here, you can see here since early March we've had a series of negative volume reversals. You can count them. That's up to 5 already. This was the 3 days back is the most recent one. Let's put up the data window here so we can get specific times and prices. So the first one that was on March 6th. One of the things we try to do here, as you know, is try to tie in these 533 stochastic. And when it's in a downtrend and we have a negative VR, we tend to take the trade. Here you can see a negative VR forming, but stochastic was rising, so I tend not to take that trade, and that was a wise decision. Here you can see a Leibovit negative VR on the 24th, and we did have a declining stochastic, so that worked out nicely. Here we had a negative VR on the 31st, had a rising stochastic, so I did not take that trade even though it did follow through for 1 day. But stochastic has been in a bit of a downtrend here, and my overall opinion is you've got a bunch of negative VRs here, and yes, it's been swinging back and forth, and yes, the Federal Reserve could come out Monday and trigger QE4, and this market could explode, but until we see a breakout above these highs and or some positive volume reversals here, some positive VRs, I would say you got to be a bit careful. We have this 200-day moving average here in the SPY. Oh, it's around the 206 level, so that could be the next big support since we're already under the 50-day moving average. And until we see a change here, you got to be a bit cautious on the market. Generally, I look for a low in the March time frame, a rally into April, May, with the old thinking sell May, go away. Could a bear market have already started? Well, there's a bunch of other indices out there that have been looking toppy for a while, and we're focusing here on the SPY. But the market has been in a bit of a distributor pattern for quite some time here, so something could be unfolding here on a more negative note. But we're trading, so that's just chit chat in terms of our short-term perspective here. But at the moment, caution flags are definitely raised. So again, I appreciate you checking in. It's Mark Leibovit here at the Leibovit VR newsletters. Of course, we'd be happy to see you subscribe to one of our newsletters as well. Have a great day. Thanks for checking in.